The PPI just got announced this morning, and it is absolutely shocking Wall Street as it absolutely crushes expectations. So it's not what everybody came in thinking we would be talking about this very morning. In fact, Jerome Powell has always been saying inflation is running way too hot, and we need to keep interest rates high in order to combat inflation. But does this open the door for a massive rate cut? 50 basis points potentially, with well more than what we anticipated. But first, let's dive in to the PPI report that we got this very morning. So this is breaking news as the PPI came in and actually improved month over month. We saw a massive increase last month in July, and this month we actually saw a decrease in the month over month value. In fact, here's the official numbers here from the Federal Reserve as we saw it fall from 2.7 to 2.8%. So if we look back and we take a look at what has gone on this week, here's the current situation of the United States. We've had jobs data revised by nearly 1 million jobs, the largest revision in history. June marking the first job loss since 2021, and PPI inflation falling by 0.1%, its second decline in a year and a half. Then the unemployment was up, and now we have CPI and PCE, or the consumer reading tomorrow, which last jumped in July. So now we're going to be asking, is the Federal Reserve late when it comes to these interest rate cuts? I mean, we've had this entire time Donald Trump calling Jerome Powell too late, Powell, which is honestly, I think, very hilarious. But as he does with his nicknames, he's been essentially just trying to come in and force this rate cut. Now, I'm going to get into those rate cuts here a little bit later, but make sure you guys are hitting that subscribe button for me and telling a friend to tell a friend that we will be covering these PPI numbers, excuse me, and we'll cover PCE tomorrow, but these core PPI numbers falling, and the expectations were so high that it's honestly pretty shocking that we saw such a giant decline and a giant move from expectations down and beating expectations by 0.7%. And I know you stock market folks sounds like it's not a lot, but 0.7% is absolutely massive, especially when you're talking about these numbers. Now, the wholesale prices are what led the charge here. In August, the Fed rate decision loomed. We've seen the wholesale prices falling and providing, quote, breathing room for the Federal Reserve to approve an interest rate cut at its meeting this month. So the producer price index, which measures input cost across a broad array of goods, fell 0.1% after a downwardly revised 0.7 increase in July, well off the estimate of a 0.3 increase. Now, the interesting thing that I've been covering this entire time, for those of you guys who keep coming back to the channel, you guys have heard me say this time and time again, but these numbers, they keep getting revised. This is the first time we've seen a revision actually go in a positive direction. We've seen the jobs data, I covered that a little bit earlier, but the jobs data coming in and essentially being revised by nearly 1 million jobs. That's not something to frown at, folks. I mean, there's not that many working people around, or at least searching for jobs. So seeing that these PPI numbers have been revised in the past, not necessarily the most positive and bullish news, but we are going to be catching and looking into this a little bit deeper here. So follow with me. As we've seen the PPI numbers fall, they always exclude food and energy, which I don't know about you guys, but I'm coming to you live using energy, and I've got my coffee with me right here this early morning. So, getting that food in, those are two essential things to live, obviously, but they always seem to exclude that. Now, it's ahead of the central banks, now interest rate cuts, which are implying 100% probability that the committee will have its first rate cut, and we'll get into those exact numbers here in a minute. But seeing this annual inflation drop is absolutely drastic. Now, these drops are huge because now it justifies that the US can cut interest rates because Powell has essentially been saying, hey, you know what? We can't cut interest rates just yet because inflation is not under wraps. We haven't hit that 2% target, and we haven't gotten anywhere close to that. In fact, with this 2% target, we've seen details of the report showed of the core PPI, which excludes that, and it's increasing. It's still increasing by 2.8%. We haven't really looked at the the PPI just in general, but if you look at it comparatively to the US dollar index that came in as bearish pressures, right? It was at 97.65, and it's still there as of right this second with the Dixie at 97.6. But if you look at it comparatively, right? The US dollar. The US dollar versus, versus the euro, the British pound, CAD. The only thing that's really beating it recently is the Canadian dollar, which is interesting. But the producer price index fell with that 0.1 monthly decrease, and the finished goods is what led the charge. Now, a significant factor in the decline was a 2.5% drop in unprocessed energy materials, the largest decrease. I mean, of course, we've had big decreases, but the largest decrease since March of this year, which is absolutely massive. And I can see I'm blocking a little bit of this for you guys, so I'll move myself. And then if you look at the wholesale, inflation is down, and the lagging indicator, the PPI, is often a leading indicator for consumer prices. So a sustained drop in producer prices could signal a continued cooling inflation in the future. But it does show mixed signals because there was an increase last month. So we're going to be keeping a close eye on this. Even though we've got friend of the program, George Gammon, showing that, hey, growth and inflation are greater than the debts and the deficits. And that's something we got to keep a very close eye on, because even though we have, the inflation numbers coming down, we did see what happened in Great Britain or the UK, right? They cut interest rates, and then all of the sudden, inflation is now skyrocketing up. And because of the inflation numbers coming down, this essentially just opens the door and opens the floodgates for the Fed and giving them the position in order to cut interest rates. I'm going to say we need to caution everybody on this, where everybody is saying, hey, you know what? Let's cut interest rates. It's going to help jobs. It's going to shoot asset prices up. But I'm of the opinion we could be in a relatively big size asset bubble if we keep going down this path. Because when you take a step back and you really look at the things underneath the hood, okay, inflation potentially is coming down. We'll see how the CPI numbers are, but we're still at 2.7%. We haven't reached that 2% target. And granted, that's an arbitrary target, but we've been floating above 2% for quite some time. And now there's a 90% chance that we're going to cut at least 25 basis points here in this next week. And now a 10% chance that we're going to cut 50 basis points. So I think that this is going to continue to, come up, even though we're literally opening at all-time highs right now. So breaking news, the S&P 500 opened at an all-time high during this recording. And we don't have anybody extremely bullish in the chat when it comes to, all of these asset prices. I know we got the GOAT Alt-Nighter Hider in the chat. Of course, smoke that like for me. Make sure you guys are subscribing. But when we've got the market responding like it is right now, I mean, you can be all but surprised when you see this massive amount start to come in, right? I mean, the amount of money just going to be dumped into assets is going to be huge because everybody essentially just looks at the assets as a flock away from the dollar. I mean, it's now up 35% since April 2025. And the Oracle stock is now in position to have its best day since 1999. I mean, that is absolutely crazy when we see things like that. So, this flexible average inflation rate, yes, it's not the 2% target. You are correct, all nighter hider. But it's always interesting that this is what they talk about, right? Oh, we want to hit 2%. We want to hit 2%. And now, we're going to have this just out, no inflation, too late, must lower rate, big right now. Powell is a total disaster who doesn't have a clue, President DJT. So we're going to have what we see in this bottom right corner here. The money printer is about to come on. So we're going to continue to see these asset prices really start to come up. And I think it's going to be something that is going to be of the norm. So even with the revision, July's PPI was revised down from 3.7 to 3.4. So we're going to, see really just what this CPI number is going to be coming out as tomorrow. And that's going to be a big indicator. Now, all of this is just pointing to more bullish price action for assets as we're going to see rates come down, and it means this asset bubble that we're currently in is going to keep on trucking on. So make sure you guys are hitting that subscribe button with the bell notification so you could join All Nighter Hider in the chat, because his kitty is commanding some cuddles right now. And I'll be catching up with you guys tomorrow. And we got McLovin now in here. So what's up, GOAT? Maybe I'll keep ripping actually for a little bit longer, because we just hit an all-time high in the S&P 500 and opened at such a drastic rate. I mean, it's crazy to see, what we've got going on here. So with Oracle just jumping up, I mean, you got to look at how the other stock market is going to perform. But I think that, we're going to start to see these initiatives start to rise up a ton. Now, we're going to see, some potential from here. Right now, we're seeing something kind of crazy where we're saying, hey, even though there's no inflation and it's still up 2% year over year, there are more home buyers over the average age of 70 than under the average age of 35. So I don't know how to read that. I mean, I would kind of assume that it's essentially these boomers helping out the young guns and maybe signing for them. So we'll have to essentially watch how this plays out. But as inflation is quote unquote coming down, and these boomers are sitting on $82 trillion in wealth, as these interest rates come down, that's what the growing trend that we're going to continue to see is that boomers are going to have way more money just sitting around waiting to be dumped in. Now, this money going to be very interesting because, hey, we're already seeing it. More average age of people are more average age of people buying houses are, in fact, some of these guys or some of these people over 70. And so it's going to be, pretty interesting as we see this all play out. I mean, we've got the most we've ever had in the chat here today, too. So extremely bullish on everything here going forward. The macro insights. Make sure you guys are smoking that like and hitting that subscribe button for me, because, when we see these numbers start to come out, this is something that you got to keep, so we got to, see 405 economists were dead wrong about everything again. My goodness. Zero hedge coming for people's neck today because, hey, it's very interesting when we've got this. Now, I know, we've got a lot of people that come out and look at different inflationary numbers, but one of them I find kind of interesting is this new inflation calculation, and I'm trying to find it for you guys. But inflation at an all-time low, but wholesale inflation is keeps on coming down. So I'm gonna keep looking for that. Maybe I'll report it to you guys here tomorrow. We've got a long day ahead of us. Great market. The silver tsunami. I think silver will trickle. I think there's a lot of things here. If you guys came in a little late, please watch that replay for me. Shout out to McLovin. Shout out to all you guys in the chat. I think we got 6 or 7 of you at the max. So make sure you guys are hitting the subscribe button, and I will see you guys all tomorrow.